Hey everyone, welcome and welcome back to my channel once again. This is Abhishek, your friend but not a financial advisor, and today we are going to talk about two high growth stocks which actually nobody's talking about and are tend to be forgotten somehow. And that's why I came up with this video for you guys to talk about these two really good high growth stocks and could be maybe best growth stocks for the year 2021 or beyond. So without further ado, let's just jump right into it. So as we might have seen guys that the markets are getting back at record highs, resuming a year-to-date climb that was temporarily interrupted from mid-February through the first week of March. A series of interrelated factors have worked together to push the stock values back up. The first factor is that the economy is reopening again. That's lasted last fall but was slowed down again by a wave of corona infections during winter. And the rapidly expanding vaccination program that has people confidence now, and it looks like the US economy is headed for its highest growth rate in several decades. And the second factor which adds more confidence to these consumers is that they are literally sitting on a good amount of cash with all these stimulus checks. For example, the last stimulus check of worth $1,400 that went out with the COVID relief bill last month. But also spending activity in 2020 was low, that household savings are at record high levels. And apart from that, like we already know that the Biden's administration is also talking about a new infrastructure bill which it wants to pass through Congress, bringing up the prospects of trillions more in federal spending. And finally, the Federal Reserve has signaled that it has no intention of pulling back on its long-standing easy money policies. And as a result, the investors are ready to spend and the stocks are rising. And the recent gains in the stock market are also underpinned by a flood of positive economic data. The key data point, the one that's been getting the headlines, is the monthly jobs number. And the recently released March figures showed 916,000 new jobs which were added just last month. That was almost half more than being expected and came up with upward revisions to January and February that totaled up to 156,000 new jobs. Now guys, those gains have the streets analysts looking for stocks that are poised to grow with the broader market. So before it's too late, let's talk about those two stocks which the analysts are quite bullish on, and these stocks might have a good potential and upside potential of 80 to 100% from where they are right now. And the first company which we are going to talk about is Golden Nugget Online Gaming, trading with the ticker symbol gnog. Now guys, if you want a detailed video on this, I have already made a detailed video on Golden Nugget, and if you want to check it out, then just have a look at the iCard above. So few industries drip money quite, as we already know, and especially the online gaming. The internet versions of traditional casino games are highly popular, and a successful online casino is a potential gold mine for us retail investors as well. Now, Golden Nugget Online Gaming is the largest online casino site operating in New Jersey and has spread its operation to an additional 9 states. The company went public through a SPAC merger, we already know, back in December, and has been trading since then on Nasdaq. But being a new company to the public markets, gnog hasn't got a long record of open financial disclosures. And that is like a small drawback which I would consider as an investor. But the recent Q4 2020 earnings report, the company's first since completing SPAC transaction, shows reason for optimism. At the top line, which is the growth in the revenue, the company had quarterly revenues of $23 million and full year 2020 revenues were $91 million. Management increased its guidance for 2021 to the range of $130 million guys to $145 million, or up to 51% at the midpoint from last year's results. So just to show you guys a quick evaluation update and comparison of Golden Nugget with its key competitor DraftKings in the same niche of online gaming business. So as we can see right here, at the time of making this video, DraftKings is currently trading at $62.09 and was up by 1.26% in the pre-market. So as you can see right here, that DraftKings evaluation is currently at 40 times its price to sales ratio and 37 times its enterprise value with respect to its revenue. The other important thing to be noticed here is that its market cap is a bit higher than its enterprise value, whereas Golden Nugget's market valuation is sitting at 13 times its price to sales ratio. Now guys, I do know that this price to sales ratio in itself is quite expensive in general, yeah, but here we are talking about a specific industry, so we do have to compare this company with its competitor in this particular specific industry. So as we already saw, that if we compare the price to sales ratio of Golden Nugget with DraftKings, we can see that DraftKings evaluation is more than 3 times much more expensive when compared to Golden Nugget. And we can also see the same effect when we take the enterprise value with respect to its revenue growth. So we can see that again, Golden Nugget is at a much cheaper valuation when compared with DraftKings. Here, the other important thing also worth noticing is that the market cap of Golden Nugget is actually less than its enterprise value, while on the other hand, for Golden Nugget, it's quite the opposite. So just to give you guys a small hint and just an outlook so that you guys can make your own decision. So this is what gnog can do in the coming year or in the coming years. So the enterprise value, like we already saw for gnog, is at $1.4 billion, and sales estimation for 2021 is $120 million. Now guys, this is really achievable considering the sales from Q4 alone. 2020 was $24 million approximate, and in the whole year 2020 they made approximately $85 million of revenue. So I do think that in 2021, with everything going on and the economy reopening, I do see that the sales might go in favor of gnog, and this 120 million is not extraordinary. This is quite achievable. So this gives us a multiple of enterprise value versus sales of 12, and this means that the valuation should be approximately around $2.4 billion. We simply divide enterprise value with the sales, so this gives us an evaluation of $2.4 billion approximate. And the number of shares outstanding, you can check it from Yahoo Finance, are 40 million shares. And thus, this gives us a share price of $60. Now guys, I'm no way saying that $60 can be reached. So this is like too much, to be honest. But I do think that it can really achieve $30 to $35 for sure. So this is achievable. This price for gnog is justified considering the enterprise value to its revenue. And also if we compare the enterprise value with respect to the sales of DraftKings, it's sitting at 20 times. So I do think that, yeah, this is quite undervalued, to be honest. Any price for gnog below $18 is a really good buy. This is just my opinion, guys. So this is what I wanted to show you. So guys, last but not the least, I just wanted to give you guys one more stock forecast and the price targets for gnog. And we can see right here on TripRanks right here, we do have 2 moderate buy ratings and no hold and no sell ratings. So we can see that the analysts are expecting the price to move up to $24. That's the lower range, and the high range is approximately $28 with an average price target of $26, which is still an upside potential of 63% approximately from the price it is at right now. So guys, this is really achievable. I mean, above $20 is really like justified for gnog. Below $20, I don't see that the price is justified for gnog regarding its performance. So that's why 2021, when the economy is reopening, people might have more money to spend on online gambling. So I do think that they can really achieve the revenue estimates which they have estimated for 2021 and beyond. So I do think that the stock price will definitely go beyond $20 in this year for sure. And this is what I'm expecting. So $60, like we saw, is yeah, it's quite like not so logical right now. We do have to see that how they do in 2021 and 2022, and yeah, in the future, who knows, it might reach for $60, but for now I do think that it can easily reach $30 for sure. That would be a justified price target for gnog according to me. That's just my opinion, and this is what I wanted to show you guys as an extra tool so that you can consider yourself whether to buy in or not. But for me, any price below $18, guys, is an amazing buy, and it's really cheap, to be honest. So I myself would definitely jump into gnog once again. I mean, average down. So yeah, that's my opinion for gnog. Now let's move on to the second stock. The next company which we are talking about is Prometheus Biosciences, which is an early stage clinical research company focused on using precision medicines to target GI and immune mediated conditions. Specifically, Prometheus is working on new treatments for Crohn's disease and colitis, which are also called inflammatory bowel disease or IBD. The company's pipeline includes 3 drug candidates, one of which PRA023 is in phase 1 trial, while the others are in preclinical phases. Now, the clinical trial on PRA023 started in December of last year after receiving the IND acceptance notice from the FDA. Now, apart from that, the other big news for Prometheus was in March, when the company got IPO'd. RxDX entered, and the company entered with the ticker symbol RxDX into the public markets on March 12, trading on Nasdaq. The IPO put 11.5 million shares of common stock on the market and closed it first day trading at $25.29. And what set aside Prometheus is its approach, using precision medicine in a select group of patients, which has impressed many analysts out there, and these analysts have initiated coverage of RxDX with an outperform rating of $34 price target, because Prometheus is providing a medicine strategy that has the opportunity to demonstrate superior results in a pre-screened population that could translate to accelerated development timelines and increased use with the identified patients. The central strategy for new drug development with no precision medicines currently available for IBD, and where Prometheus is working on. Rationally designed based on genetic profiling, and we view RxDX as uniquely positioned to drive this strategy. So if you look at the analyst price targets for Prometheus Biosciences, we can see that we have 4 buy ratings, strong buy ratings, and no hold and no sell ratings, with an average price target of $32.25 and with the low price target of $25, with the high $40. So guys, if we still consider the average price target of $32 given by the analyst, we still see an upside potential of more than 40% from the current price Prometheus is trading at right now. So if we just see at the 6-month chart, we can see that the stock price was falling down and down and down, and finally it's getting back up. So we can see here a U-shaped recovery, which is quite good for the stock price. So as we already know that the clinical trial on PRA023, which is working on inflammatory bowel disease syndrome, was started in December 2020, and after receiving the IND acceptance notice from the FDA early in March, the company announced that it has commenced dosing patients in the multiple ascending dose. So we already know that their drug PRA023 is in the phase 1 clinical study and approaching to the 1B clinical trials. So we do know that the company is working on their drugs, and as soon as the company gets into the phase 2 trial and further in phase 3 trial with their PRA023, which is quite an amazing drug, I do think that the stock price can easily cross $30, and I do see that the stock price touching $40 until 2022 or mid of 2022 for sure. So yeah guys, this is a biotech company, and pharmaceutical companies do have a slow growth, just they are mostly based on catalysts. So we have to be patient if we decide to get into this company. This is only for patient investors, so that's why I would say that please be careful, and only if you are willing to hold it for a longer period of time until they are working on their drug PRA023, which is working on the inflammatory bowel disease, I would say that the stock can move in sideways, and depending upon their revenue growth and financials, we can see that there might come a dip when EPS is not met by the estimate. So that's my view on these two stock, guys. I'm more bullish, to be honest, on gnog, but I just wanted to give you guys more options for your investment strategies. And again guys, this is not any kind of a financial advice, this is just my personal opinion what could happen with these companies. And yeah, that's it guys. So that's it guys, that's all for today. Thanks a lot for watching. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.